Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Political chaos in South Korea. The country's main opposition party is seeking to impeach President Yoon for illegally declaring martial law. The unrest in South Korea sends Asian stocks lower as the brief imposition of martial law caught global investors off guard. And France is battling its own political uncertainties. President Emmanuel Macron is urging lawmakers to reject a no-confidence motion that could topple his government. Well, it has just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. So many political developments to talk through overnight, not least what happened in South Korea. But before, as ever, we're going to take you to global markets because we saw yet another record high for the S&P, 55th record high for the year. Some focus on the labor market data this week, job openings rebounding last month. On Friday, of course, NFP is going to be in focus as well for investors. But then this evening, we are going to be paying close attention to what Jerome Powell has to say. He will be delivering some remarks later on today. Magnificent 7 also at an all-time high. You're seeing that reflected in the Nasdaq, up 0.3% as far as futures are concerned, brushing off some of the developments in Asia. I'll get to that in a moment. Brent also in focus, stabilizing around the $74 level, 73.5 is where we're at right now, on news and reporting that suggests OPEC may be mulling an extension of 3 months vis-a-vis putting extra production barrels back to the market again. Their decision takes place tomorrow, so watch out for that with OPEC+. And then Euro is still in focus as we head towards a potential no-confidence vote later this afternoon for the French government. Switching over, though, let me just highlight for you, this is a chart that our colleague David Inglis put out showing how much volatility we saw last night in the Kospi index, that's the South Korean equity index. At one point, we were down more than 5-6% after news that martial law was imposed. And then we heard that support was going to come in to the market. After that, lawmakers came in and requested to lift martial law. And then we saw some stabilization. So a roller coaster ride for South Korean equities. But still, our analysts are warning that you may continue to see equity outflows because of what has gone down in the last 24 hours. So let's take a closer look at what has been happening with some of these key Korean assets with Avril Hong in Singapore. Avril.
Yeah, Jumana, I think what was key was how swiftly financial authorities sort of stepped in with those comments of provision of unlimited liquidity. So that helped to calm investor nerves a little following the shock announcement of martial law, which of course was short-lived. And we actually saw the Korean won hit levels we haven't seen since 2009. There is that recovery underway today following what we got, those reassurances from financial authorities. The Kospi, KOSDAQ, the smaller cap index in the country opened down 2%, pairing some of those declines. But note here, despite a bit of calm returning to markets, South Korea's currency is still the worst performing in the region this year, and its stock markets among the worst performing. And think about as well how the Value Up initiative, this is a key program from the President Yoon administration that is important for unlocking value for shareholders. That's something that could be put on the back burner for now at a time when tech earnings have been disappointing. So that's something that's going to be potentially a bit of a headwind continued for South Korea markets that we're going to be keeping a close watch on, Jumana.
Avril, thank you so much. Let's talk more about the politics of what happened. South Korea's main opposition party says it will seek to impeach the country's president after he shocked the nation by imposing martial law, only to reverse course just hours later. Let's get more with Asia economics reporter Katya Dmitrieva. So let's just talk through exactly what happened yesterday, because it could have been a constitutional crisis. But in the end, some people are saying that democracy won out.
Yeah, one of the shortest martial laws, I think, in the history of the world there, with just a few hours. So the president had declared martial law, and this was a very unsurprising move. I mean, you could see that in the market reaction, also among politicians and policymakers. And very swiftly, you had policymakers gathering for that 190-0 vote to lift martial law, and very quickly developing. I mean, as you can see, these developments are happening by the minute. We just had the main opposition Democratic Party policymakers speaking, as well as the Bank of Korea calling this emergency meeting to discuss potential reaction. We heard from them that they will be, they promised market liquidity in case of any fluctuations there. And markets did recover somewhat, but as we just heard, currency is still the worst performing, and there's still some risk-off sentiment, because the next step here is, okay, okay, then what happens? So we no longer have martial law in the country, but now we have the president whose role is at risk.
Yeah, I was reading a report put out by our Bloomberg intelligence team suggesting that anyway, even the run-up to this, you saw equity outflows. And you've got to think that a certain amount of risk premium is going to be priced into South Korean assets moving forward, both in equities and in the currency space. So how much lasting damage are the developments of the last 24 hours going to have on South Korean assets?
Yeah, it's a really good point. And not just in markets, but in the broader economy. Like, you had economists already revising down growth estimates for 2025, stepping down from this year's pace. And on top of that, you have incoming President-elect Donald Trump, and that injects a lot of uncertainty into the trade picture. South Korea, of course, relies very heavily on exports in the chip space, as well as a range of other products. So the outlook is looking a lot riskier. And in the next 48 hours, 24 to 48 hours will really be crucial, because now the main opposition Democratic Party is calling for his resignation. They're calling this an illegal move, and that will be the next step. Once they, if they are able to remove him from his position, then who will naturally come and fit next as the president of South Korea? There's no natural fit being discussed at the moment. So there's still a lot of uncertainty, even though martial law is no longer the case.
Yeah, and very relevant for the rest of the world, given the concentration of some of the chip makers over there as well, too. Katya Dimitrieva in Hong Kong, thank you so much. Now, from one political crisis to another one, President Macron has called on French lawmakers to set aside their personal ambition and reject a vote that would topple the government. Far-right leader Marine Le Pen has vowed to support today's no-confidence motion called by a left-wing coalition. Together, the two groups have enough votes for the motion to pass.
I hope so, and it's indeed possible. It depends on the members of the National Assembly, each whom has a responsibility to the French people, to the voters of their constituency, and before France too, which is at a rather serious moment.
Well, that was the French Prime Minister Michel Barnier speaking. Now let's get out to Bloomberg's Bill Ferries. Bill, again, interesting developments in Europe as well, not just South Korea and on people's minds. Just talk us through how President Macron, who happened to be in Riyadh yesterday, and the Prime Minister Michel Barnier are facing up to this potential no-confidence vote and the potential removal of government from power in the next couple of days.
Well, they so far seem to be acting quite confident that there won't be a unified vote against this government, that they can peel off lawmakers, perhaps from more of the leftist coalition, to keep this government afloat. What we're seeing, of course, are the reverberations from Macron's party's defeat in the European elections and his decision in June to call this snap election, which went very poorly for his coalition. So now Marine Le Pen has the largest bloc of parliamentarians and is throwing that weight in with this leftist group. But it's not clear whether, at this point, whether the government will survive this 4 p.m. Paris time vote that's due to take place. And as you mentioned, President Macron in Saudi Arabia yesterday, still in the region, I believe. I don't think is scheduled to fly back to Paris until later on Wednesday. So I don't know if they're bluffing or they are confident that some lawmakers will step away from maybe the party demands and vote differently, vote their conscience on this, and vote to keep the government in power.
Yeah, I think the crucial element here is that there isn't one party, one specific party or singular party that captures the majority. So in order for the no confidence vote to get through, you would need the left and the right to vote together. And so that's going to be an interesting dynamic to watch out for later this afternoon. Let's say for whatever reason, this government actually does survive. Is that the end of it? Are we likely to see any more challenges, or can we just assume that the budget in France will then pass unscathed?
No, as you laid out, it's a very polarized environment split between the three blocs, the three parties. And there are going to be more, even if they get through this process, there are going to be at least two more budget-related votes coming up in the weeks ahead. And so the sticking point this time has been about the pension system and whether to index that to inflation or not. But if you have additional sticking points in the next two budgets, does the government take a chance and force that through Parliament again, or do they try to find a way to negotiate more constructively? But on top of it is also just the politics of the situation and whether the leftist coalition or whether Marine Le Pen's National Rally feels like perhaps they might benefit from a little more chaos in the French political system. So a lot of big questions, but this is most likely not the last hurdle for Macron and his prime minister.
Yeah, Bloomberg's Bill Ferry is, as always, good to talk to you. Well, coming up next, as more Fed officials signal rate cuts, we'll discuss market strategy with Tanto Capital Partners founder Ozan Ozkural. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jamana Versace in Dubai. Well, more Fed officials are signaling support for rate cuts, but say the central bank's policy decisions are not on a preset course. Market uncertainty remains high ahead of the policy meeting in 2 weeks, with Chair Jay Powell also set to speak on Wednesday.
Over the next year, it feels to me like rates come down a fair amount from where they are now. Just the inflation series is kind of my pet metric. It's the most important part is to look at inflation and not just the aggregate, to kind of break out the categories. And so my pet thing has been housing inflation.
Let's bring in Ozan Ozkural, founding managing partner at Tanto Capital Partners. Well, there's so much to focus on when you think about the direction of travel for markets. Some people are looking at monetary policy, others fiscal policy, but then geopolitics front and center. I mean, you saw what happened in South Korea over the last 24 hours. What role do you think geopolitics are going to play in determining market direction in 2025?
I think it's going to be impossible to talk about market direction or pricing risk without talking about geopolitics. That was the case in 2024. I think it's going to be the case in 2025. Notwithstanding that, I think fiscal policy will drive pricing more than monetary policy. But if you look at what's happening in the world right now, we have so many fires going on in so many different regions that I think asset managers have to keep ahead of the curve to try to make some sense of what's going on to price assets.
Yeah, but you know, it's not always the way that markets react to geopolitics. Again, every day I stand at the wall and I talk about new stock market highs. It's the 55th record high for the S&P this year. And there is a certain degree, perhaps, of complacency. Even if you look at oil markets, this part of the world has been a war raging on for more than a year, not really priced in to the price of oil over here. So what is it about geopolitical risk that isn't translating into where markets are trading?
I think that's a great question. I think we have to separate U.S. markets from the rest of the world going forward, even more so than we have done before. There is no perfect hedge, but U.S. is as well hedged as possible to what will happen in the rest of the world. But I do think that 2025 onwards, we will start testing the resilience of the global supply chains. Obviously, everyone's trying to make sense of what the Trump trade tariffs will look like, which are hugely inflationary in its core. But so I do expect a lot of, if you will, a movement towards globalization version 2.0, whatever that may look like, with a lot of friendshoring, nearshoring, and different regions acting differently.
Yeah, so you talk about Trump tariffs, but what about Trump's foreign policy? And even now, we don't know who the Secretary of State is going to be. There are a couple of names being thrown around. That being said, he does not seem to be a big fan of live wars. He's even said he wants to end wars in 24 hours. He wants to end Ukraine-Russia. He wants to end what's happening in Israel-Gaza. If, let's say, for whatever reason, he's successful at cutting a deal in both of these jurisdictions, is that not a risk positive?
Of course it is. It's a risk for the rest of the world. Let's take the three major issues, if you will. Russia, Ukraine, the Middle East, and the battle that supersedes all of these, which is US v. China, that will drive a lot of the issues next decade. On Russia, Ukraine, first of all, what does it mean to end the war? So let's just say that he manages to successfully end the conflict as it is now, with Russia having secured whatever territory they've got. If that is the case, then there is an automatic target that is going to be likes of Moldova. And then there's a chance of Europe and Russia heading into a Cold War that will persist for years to come. So that is what ending the war could look like if it does end the war as it is right now. If you look at the Middle East, a lot of things will change and are changing. Syria is going to kind of evolve into something else. Obviously, Israel withdrawing from Lebanon and the kind of conflict doesn't really look like a withdrawal at the moment, so it's going to be quite complex. And if you take a look at China, and I think this is going to be the one thing that we're going to talk a lot over the next year, will be all about semiconductor manufacturing and a potential reaction of China in cutting the export of rare earth minerals and refined minerals that is critical in manufacturing chips. So we are actually morphing into an area where if you're an asset manager, if you're a company, and depending on what you do, unless you are localized in the U.S., you're going to really want to understand how these dynamics are going to evolve, including commodity prices, by the way.
What are you recommending for your clients to do then? Where do you put money into 2025, given these evolving shifts and the multipolarity that you mentioned?
Look, in terms of markets, liquid markets, I am long U.S., and I'm still long MAG 7, despite of the super high valuations we find ourselves in, just because the world that we are living in will continue to morph into a much more digital world going forward. And I'm long the U.S. because the amount of innovation that takes place, the decision-making capacity of U.S., the liquidity of the markets is very much separates itself from the rest of the world. Yeah. I am short European Union and European markets, particularly short Germany, but long strategic names like ASML in Netherlands that are going to be an integral part of the future growth of the world as it is.
Yeah.
But I recommend our investors and our clients to try to price in and try to understand the nuance of geopolitical risk as much as possible. It isn't a perfect science. To try to place their investments accordingly.
Yeah. Let me just round up a final question for you, which is the focus on defense spending for Europe. And the conversations that I've been having with people seem to insinuate that because there's going to be pressure from the Trump administration for European countries to beef up their spending on defense, there's going to be less money allocated to other parts of the economy. And clearly you talk about a competition drive, a productivity drive in Europe, but they are bound by fiscal constraints. So what happens in that scenario? Do European countries continue to put money into defense spending, or is that going to be sacrificed in the name of productivity and competition?
I think they will have to increase spending in defense. It's going to have, obviously, a huge pressure on European markets overall. We don't have to go far. I mean, if you just go back to what the Draghi report highlighted, that even to retain the distance between Europe and US and Europe and China on innovation, they will need to spend north of 800 billion euros. That's 4.7% of GDP, which is a very difficult task. And that's without the increase of the, if you will, the war efforts between Europe and Russia. So it looks very difficult from my perspective for European Union. And we're looking at the issues that the French government is having right now, the elections in Germany. So there isn't a coherent, consistent approach to what the world will look like from a European Union perspective.
Yeah, and fortunately, I hear that echoed amongst so many people I talk to. Ozan, thank you so much for joining us on the show today. Ozan Ozkural, founding managing partner at Tanto Capital Partners. Well, coming up, China ratchets up trade tensions with the U.S. with a ban on several materials with high-tech and military applications. The View from Bloomberg Economics is up next. This is Bloomberg. Well, China has banned the export of several materials with high-tech and military applications to the U.S. It's a tit-for-tat move after President Biden's administration imposed fresh curbs on the sale of high-bandwidth memory chips to Beijing. Bloomberg Economics chief U.S. economist Anna Wong joins us now. Anna, great to have you with us. I'm really interested to hear a report that you and your team put out about the impact tariffs may have on the U.S. economy. And, of course, on the campaign trail, Trump spoke about the imposition of extra tariffs on countries from China to Mexico to Canada. What is going to be the lasting impact in your view?
Right. So in the piece that we put out earlier this week, we were considering procedural requirements in the U.S. Legislative process, as well as based on our understanding of the personnel that in the upcoming Trump administration, what is the most plausible escalation in tariffs? So Trump has promised 20% universal tariff on the campaign trail. We think when he does become president, he became the president, that the actual tariffs he's going to impose would be short of that. So in our most plausible scenario, which we sketched out, we think he will be the first wave of tariff will come in the summer of 2025, so next summer, and China would be the main target of his tariffs. And we think that Trump may invoke the idea that China did not fulfill the phase one agreement to restore some tariffs on the original tranche 4A, 4B, which is on a whole bunch of consumer goods that the U.S. imports from China, such as iPads or toys or furniture. And then, however, we think the main escalation in tariffs will happen in 2026 because from a policymaker's perspective, it makes sense to sequence the tariff increase along with the tax cuts. So knowing that the tax cuts would be boosting economic growth would give them some comfort that if they do rack up the tariffs and that does have some negative effect on growth, it will be supported by the trade, the tax cuts. And we think that the countries that will be hit in that in 2026 would be Canada, Mexico, and China's tariff will eventually be tripled in that scenario.
And let me just ask you about the impact on inflation. What does it do to PCE next year?
Yeah, so the details matters here. So in the first Trump administration, the tariffs are actually strategically selected to have minimum impact on inflation. So if you looked at the sequence of how these tariffs were designed and escalated, the first couple of tranches were focused on intermediate and capital goods. And economic theory actually tells us that tariffs on intermediate and capital goods does not actually have much inflationary impact, but however, it will hit on industrial production and manufacturing and growth.
Yeah, very valid points. And I see, per one of the conclusions of your report, the combined impact would be a tripling of average U.S. tariffs to almost 8% by the end of 2026. Thanks so much for joining us and for sharing some of the findings. Anna Wong from Bloomberg Economics. Well, coming up, we're going to be talking about OPEC. OPEC Plus nations make progress towards an agreement to delay its oil production revival. We'll talk more about that in a moment. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Political chaos in South Korea. The country's main opposition party is seeking to impeach President Yoon Suk-yeol for illegally declaring martial law. As Ghana heads to the polls later this week, we look into the environmental damage and the billions of dollars in losses caused by the country's illegal gold mining network. Plus, U.S. President Joe Biden met with his Angolan counterpart to discuss trade and investment opportunities, including the Lobito project. We look into the railway set to deliver critical minerals across the continent. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Another record high for the S&P yesterday, 55th record high. I feel like a broken clock every day saying the same thing. But another record high for the S&P. NASDAQ also seeing strong gains yesterday. Magnificent 7, yet another record high there. Amazon leading the charge after very solid Cyber Mondays. So good couple of days for retail sales going on through there. Futures brushing off some of the geopolitical concerns in Asia, leaning towards the green as we get into the U.S. session. Brent also hovering around $74 here, marginally more positive on the day, up about 0.2%. Some reports coming through suggesting that the OPEC Plus group may consider delaying bringing back extra production to the market by another 3 months. So despite that headline, we aren't seeing a lot of support come through for the price of oil. We'll talk more about that in a moment. And then Euro in focus, we are sort of stabilizing around 105, but again, political risk high on the agenda as we head towards that no confidence confidence vote later this afternoon for the French government. Switching over, one thing I do want to point out to you is that even though we talk about stock markets record highs, positioning is very extreme. Very few short sellers out there. And if you look at a gauge for investor sentiment towards stocks, look what this says. The percent of respondents who think stocks will be higher is at record high. So people are extremely optimistic about where stock markets are headed from here. I thought I would park that as we head towards a very strong year at the end of the year for the S&P, tracking gains of more than 25%. Can we repeat that in 2025? That's a big question. All right, let's also take a look at valuations in some of these Korea stocks as well. Avril Hong is in our Singapore studio, standing by. A roller coaster ride the last 24 hours. How are things looking right now?
Absolute roller coaster, that whirlwind for Korea stock investors. They are pairing some of the declines from earlier on in the session, but the Kospi note here is still down 8% since the start of the year. You look at valuations, it's about 8 times forward earnings. It's also underperforming the region's benchmark. This begs the question, there's all this global attention on Korea's stock market sort of attract long-term investors that are looking for value, and MLife's Mark Cranfield says maybe so. You see how the U.S. tariff risk might already be priced in. There's also speculation that given the political developments, the BOK might turn out increasingly dovish. Remember, last week it already surprised with a rate cut that was seen as a preempting of these tariff threats. So things that could boost South Korea's stock market. So keep that in mind, even as we see these declines in South Korea stocks today. Jumana.
Yeah. Avril, thank you so much. And even we're hearing from rating agencies now, Moody's rating saying Korea impasse may affect the government's ability to act. So people are definitely taking note of what's happening there politically. All right, switching over to the energy complex. Oil is holding steady after the biggest advance in more than 2 weeks. This as OPEC Plus made progress towards an agreement to delay its oil production revival by another 3 months. And after the U.S. imposed more sanctions on Iranian crude, let's get the details with Bloomberg's Stuart Livingstone-Wallace. So we don't have all of the details yet because the OPEC meeting hasn't happened. But there certainly is an expectation in the market that they're not going to be able to bring extra barrels back to the market right now.
No,
the market just can't handle it.
Kick the can down the road yet again.
Yeah.
I mean, this was something conceived in June, and it's still going on now, and it's still going to be going on in 3 months from now. And the conversation that no one's having around this is whether the OPEC playbook is fundamentally challenged by the realities of the world they're operating in.
Yeah.
So this is the same stuff they've been doing for decades, and it's worked reasonably well for them, but you're now in a position where the US is producing 30 million barrels a day. That is no longer a world that works very well with production cuts. So you're going to take the pain, and they have been taking the pain in the short term.
Yeah.
What is the end game here? Are they fundamentally relying on Trump to come in and constrict Venezuelan and Iranian supply, and that gets them off the hook, but only a little bit? Because remember, there's 6 million barrels under capacity or thereabouts as a group. That's just OPEC. Well, if you take out Venezuela and Iran, maybe at best that's a couple of million barrels. That still doesn't solve the problem. So what is the long-term plan here exactly?
Yeah, but then there's also back in June when they made this first announcement to start bringing barrels back to the market, there was also a carve-out arranged for UAE. And from what I understand, UAE are going to start pumping more anyway, irrespective of what OPEC Plus decide to do vis-a-vis the voluntary cuts. And there perhaps are some valid questions about how long they can stay on as a cohesive unit, given that so many members are actually pushing and wanting for more market share and more production to come to the market.
Yeah, I mean, yes, they have propped up prices, but number one, the prices are nowhere near what most of them need to break even on their budget. So either they're going to have to rethink their budgets or they rethink their strategy. And you're absolutely right about the UAE. That is a separate agreement that was fought over for a long time and hard won. But they're not the only ones that they're going to be producing more. You know, you've got Kazakhstan, you've got Russia, you've got others. And again, the cohesiveness of this group is rather dependent on 1 or 2 members willing to take most of the pain. And it's going to get to the stage where those 1 or 2 members, I think, are going to get quite fed up. And maybe we go back to what we saw a decade ago, where you effectively have a price war and you try and knock out market share. But in an environment where the shale producers are infinitely more productive and efficient than they once were, that's going to be much, much harder to do.
Final point is one of compliance. In the run-up to this OPEC Plus meeting, the Saudi Energy Minister, ABS, had several bilateral meetings with Russia, with Iraq, Kazakhstan as well. And all of those countries have been overproducing versus the quota. Do you think there's perhaps going to be a little bit more focus on discipline within the group in the coming months?
Well, how do you enforce it? And that's the problem, right? There is no mechanism whereby you can enforce this. It is all an agreement between, these producers. And by and large, sometimes it works well when it's in their interest, and when it's not in their interest, it doesn't work at all. And this is not new. This has been going on for many decades. But it has got to the point now where they have to make a decision. And, as we were discussing earlier, the price right now, $70, it's not actually looking terrible. I remember 4 years ago where we went negative, which was unusual, very briefly, but still.
Moment,
So 70 or in that sort of ballpark is a pretty good oil price.
Yeah, all things considered. All right, Stuart, I'll leave it there. Thanks so much for giving us a preview into tomorrow's OPEC meeting. Bloomberg's Stuart Livingstone-Wallace. All right, let's bring in Miguel Azevedo, Citi Vice Chair for Investment Banking, Middle East and Africa. Obviously, the backdrop to the region, we tend to talk a lot about the price of oil. But, with oil trading around $70 to $75, these economies seem to be doing quite well. I look at the growth forecast for the GCC going into 2025, and these are numbers that are higher than other countries around the rest of the world.
And they should remain so. It's not all about oil. We are in the UAE. The UAE is very diversified these days. On the oils pillar, they explore every molecule in the tourism sector, in the hospitality sector, in the retail sector. There's so much happening in this country. As I usually say, there's actually, you can see GDP growing on the street. Once you get out, you see the GDP growing.
Yeah.
And I don't see any reason for this to change in the near future.
How has that translated into banking activity this year?
So very solid. And let me cover more the investment banking side, where UAE has been really stellar. The most active IPO market in the world, I would say. We have seen transactions coming to the market every 2 months or so. We have seen privatizations, we have seen family-owned companies, we have seen private equity-owned companies. The market is getting diversified, all sorts of sectors. So it's not anymore what used to be before of privatizations. We had retail companies coming to the market.
Yeah.
So it's very diversified. International demand remains very strong, a lot of interest, more and more people living in the UAE. So in terms of investors actually moved here. So a lot happening, and I think it will remain so.
Do you see that momentum continuing into 2025? How is next year looking?
It's looking very good. If you look at the pipeline of transactions that are being prepared, it will be at least as good as 24. Assuming nothing happens, of course. But in terms of the pipeline, I would even say it's stronger now than it was 12 months ago. So I expect a lot more transactions.
Why? Why is the pipeline stronger? Is it because around the world we hear, I speak to U.S. Colleagues, and they mention that there's a lot of optimism going into 2025 on the deal-making front, simply because of the return of the Trump administration and their anticipated lighter touch approach to regulation, which could unlock some of those IPOs and deal-making activity. Is that going to have ramifications in this part of the world as well?
I think so. We cannot isolate the GCC from the rest of the world. We cannot. But having said, there are certain elements here in terms of making the market bigger. It's a relatively new and small market, let's be honest. But there's so much potential to grow. There's so much companies out there that are willing to come to the market. You have the leadership of the country is pushing for that to happen. But it's not only the UAE. Same is happening in Saudi, for example. A lot of local IPOs, a lot of local demand, retail demand. But I would emphasize that international demand remains very strong. And international demand needs to be served and is very willing to be served. So there's enough demand out there. It's up to us to bring the supply to the market.
Yeah. So you're obviously, engaged with these companies on the private side. And then once they start publicly trading, one of the, characteristics of being in this region is there simply is less trading, less secondary liquidity than you would find in other markets. What ramifications does that have on your side of the business? And how important is it for you to see depth and breadth in secondary markets?
It's very important. And if If I were to single out one area for improvement, it's definitely on the liquidity side. That has to do with the size of the transactions, that has to do how you allocate those transactions, that also to do with bringing in follow-on offerings. And we are start seeing that. So we cannot forget that it's a young market. So all these growth pains, everyone else has gone through those. So it's happening, but it's moving in the right direction. If you look at the transactions in 24, we started with transactions in sort of the $500 million area. We ended up the year with transactions in the $1.5 to $2 billion area. So we see an improvement there. And we see more allocation to international investors, which is an important element. I think the liquidity issue will get much better once we start having follow-on offerings of the stocks that have done IPOs in the last 3 or 4 years when they come back to the market with more supply.
Yeah. It feels like there's no week that goes by where I'm not speaking to another bank or another asset manager, another fund manager who's setting up a headquarter over here. Is the landscape becoming a lot more competitive on these deals?
Definitely more competitive, but the pie is increasing, so it's a healthy market if you want. And in terms of investors coming in, it's very, very important because once these institutional investors set up a base here, there's people living here, there's people following the market, there's vested interest in investing in the market, and that increases the depth of the market. So all that is happening, but it cannot happen in 24 I was going to say 24 hours, but not even 24 months. It takes time.
It takes time for the market to mature. A pleasure to chat to you. Thank you so much for coming on our show today. Miguel Azevedo, Citi Vice Chair for Investment Banking, Middle East and Africa. Thank you. Well, coming up, Ghana prepares to elect a new president as an illegal gold rush exposes election risks. We'll discuss the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Ghana heads to the polls on Saturday to elect its new leader, replacing the president, Nana Akufo-Addo, who is stepping down after her second and last 4-year term. Meanwhile, the indebted West African state is potentially losing billions of dollars from illegal mining that's also causing environmental carnage. Joining us for more on this exclusive reporting is Bloomberg's Jack Ryan in London. Jack, just give us a sense of how big a deal the gold mining sector and these small-scale miners actually are. Why are they having such a big impact, outsized impact on the Ghanaian economy?
Well, this is a big sector. I mean, the ASM, as they call it, so the artisanal scale mining, it makes up about 1/5 of global gold supply. That's according to a World Gold Council report recently, and 80% of the gold miners in the world. So this is something that's important across the world, but particularly in Africa, where it's actually the most common job in rural areas outside of farming, and it makes up about half of the continent's output. And so we were kind of keen to get into this in Ghana, where we know it's particularly important. Ghana is one of the largest producers of ASM gold, artisanal scale gold, in the continent. Our reporting found that the run-up in the price of gold has really made this more popular and has really expanded it, and it's been a great source of income for some people. But it has pulled land away from cocoa farming. And the country has missed out on a lot of the benefits from this kind of run-up in price in gold and the kind of profits that have come with that.
Yeah. I mean, clearly one of the major issues is that these mining activities are mostly illegal. But what are some of the other problems that come along with the type of mining that you reference?
Well, I mean, first there's the obvious environmental ones, which is particularly the use of mercury and how that could be used to extract the gold, but then infects a lot of the pollutes a lot of the waterways. So we know there was one water processing plant that found that 60% of the output of a particular river had been affected by this kind of illegal mining. And then there's other issues like smuggling. This is a big problem, particularly with this sector, and for a lot of small-scale miners who, in some instances, are not even that small. You're talking about earth-moving equipment. It's not just kind of a guy with a shovel. And you can typically sell that maybe overseas to smaller refineries, and the government obviously doesn't get tax revenue from that. And generally, the conditions might not be as good as with some of your large-scale miners that also operate in the country, like your Gold Fields, your Anglo Gold Ashantis, those type of companies.
Yeah. So let me just round up the discussion, because we started reading about the political environment and changing leadership in Ghana. Is the government trying to do anything to crack down on this type of illegal mining, or are there parts of the government, not the government themselves, but parts of the establishment who may be benefiting still?
Well, this has become a political football in Ghana just before their election, which I believe is coming later this week. And my colleague Yinka Ebukan was down on the ground visiting some of these sites and speaking to some of the local ministers about what the approach was to this, because I know that there is, among some parts of the public, a really strong call to clamp down on this. They don't want the environmental damage. They don't want everything that comes with this trade. But then at the same time, there are some people making good money from this, and in rural areas, it's typically a better income than you can earn doing anything else. It's also, it's a way to earn hard currency. Ghana had an IMF bailout last year. This industry, this trade, is worth about $10 billion a year. So it's a difficult one for the government to balance those two competing needs, and they've kind of struggled to do that thus far.
Yeah. Well, great reporting. The full article is up on the terminal for anyone who wants to get more details on it. Bloomberg's Jack Ryan in London, thank you so much for joining our show today. I know it's really early for you. All right, coming up, President Biden meets with Angola's leader to discuss trade and investment opportunities on the continent. More on those discussions next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Persechi in Dubai. Now for a look at some of the other stories we're following today. Israel says it will broaden retaliation to include Lebanese targets beyond Hezbollah if the ceasefire with the militant group collapses. Israel carried out airstrikes in Lebanon on Monday in response to an attack by Hezbollah on an Israeli military site. The Wall Street Journal is reporting Donald Trump is considering Florida Governor Ron DeSantis as a possible replacement for Pete Hegseth and his pick to run the Pentagon. The president-elect's choice for the Defense Department, a former Fox News host, has faced increasing scrutiny over allegations about his personal life. And the U.S. has sanctioned 35 oil tankers and ship management firms that it says play a critical role in transporting illicit Iranian oil to foreign markets. The latest sanctions package comes less than 2 months after the U.S. broadens the scope of its curbs on Iran's oil and gas sectors after a ballistic missile attack on Israel. And Amazon is ramping up its artificial intelligence offerings, rolling out powerful new chip arrays and a large language model it says can compete with leading rivals. The company says the new products will make it easier for its partner Anthropic to train the large language models required for generative AI. Amazon Web Services runs many servicers that other companies rent to train AI applications. Well, those are some of the stories that we're following this morning. But here is the lean for equity futures as we head into the European Open. Politics dominating the agenda in terms of the news headlines, but markets seem to be brushing off most of those concerns. And what we're seeing is S&P futures, NASDAQ 100 leaning towards the green, NASDAQ up about 0.3%, another record high for the S&P yesterday. This as we continue to see a positive push for Magnificent Seven. That basket is also at a record high as well. The Dow also leaning towards the green. And then Eurostoxx futures trading sideways, leaning towards the red, as you can see over here, despite the attention on what has been happening in France with the French government, Michel Barnier's government, facing a no confidence vote later this afternoon. if the far left and the right party up together, then what you could see is a toppling of this government, and then a lot of questions remain, a lot of uncertainty in the path ahead about what this means for the new government formation and even for President Macron himself, who is stated to be in his place until 2027. But of course, there's pressure building on him. Switching over as well, I just want to draw your attention to some of the developments that have been happening in South Korea overnight, with the president deciding to impose martial law that was then repealed later. And what you saw was a lot of volatility in the Kospi futures. You can see right from there, martial law was declared. Instantaneously, you saw a drop of about 6-7% on some of these equity markets. Even some of the chip makers, Samsung was down 7% at one point after martial law was imposed. Then you had authorities come in, the Bank of Korea come in and say that they were going to support the market. So you saw a bit of a rebound. Afterwards, lawmakers voted pretty much unanimously to lift the martial law imposition. After that, you saw stabilization around these levels, but the handover from the Korean markets overnight has still been negative, with these indices down anything from 1.5% to 2% on some of the stocks trading within the Korean index. So a lot of volatility coming through from Korea overnight. But that was it for the first hour of Horizons Middle East and Africa. In the second hour, we're going to talk more about French developments. In addition to OPEC+, the meeting is taking place tomorrow, and there are reports that they are mulling another extension of putting extra barrels back to the market for another 3 months. So stay with us for the second hour of this show. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Political chaos in South Korea. The country's main opposition party is seeking to impeach President Yoon Suk-yeol for illegally declaring martial law. The unrest in South Korea sends Asian stocks lower as the brief imposition of martial law caught global investors off guard. And France is battling its own political uncertainties. President Emmanuel Macron is urging lawmakers to reject a no-confidence motion that could topple the government. Good morning again. It's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. Welcome to the second hour of Horizons Middle East and Africa, tracking all of the political stories overnight very closely, from South Korea to France later this afternoon. But stock markets, another record high for U.S. stock markets. S&P posting its 55th record high for the year. Attention on the labor market, with job openings rebounding last month, so showing a little bit of respite compared to the numbers that have come through in the last couple of months. And also attention turning to that NFP print on Friday too, whether or not we get a rebound from that very low number we had in the last month. 12,000 was the headline. So that is going to be the focus for investors, in addition to some comments from Powell later this afternoon. You want to be watching out for that too. S&P futures, Nasdaq futures trading towards the green. Brent seeing some stabilization. We saw a bit of an uptick yesterday after reporting emerged showing that consensus is forming around the OPEC group to delay their decision to put extra barrels to the market by another 3 months. So again, another supportive factor coming through, in addition to the U.S. applying sanctions on some some ships that have been transporting Iranian oil. So geopolitics also added to the mix there. So that is giving some life to the energy complex this morning. And then Euro in focus, trading at around 105. Of course, we have seen a lot of downward pressure on the currency, given some of the political turmoil in France. We'll talk more about that shortly. Switching over, though, we were just ending the first hour of the show talking about some of the political turmoil in South Korea. And here you can see very clearly that there was a lot of price action going on in the Kospi index. At one point, we were down 6-7% after that martial law was imposed. Later, we stabilized. By the end of the day, though, we were down about 1.5%. So it tells you a lot of the political activity was translating to some whirlwind activity in some of these South Korean assets. So let's talk more about how Korea and other markets in Asia are faring this morning. Avril is in our Singapore studio. First of all, just give us a sense for how South Korean assets are trading this morning, given everything that just happened.
Well, we've seen those declines in South Korea's stock market, and they are paring some of those losses now. I think what was key is how financial authorities acted really swiftly with reassurances of unlimited liquidity. So that helped the Kospi, which traded 2.3% lower at one point in the session, to pare some of those declines, yet those risks remain. You think about how tech earnings have been disappointing in South Korea of late. Growth has been tepid. The BOK last week surprised with a rate cut, a preemptive move in preparation perhaps for Trump's tariff. So on those fronts, there are headwinds, something that we'll be keeping a close watch on. Certainly, it's worth highlighting as well for the rest of Asia, the way they view these Korea political developments. You think about how it's still a major economy. It occupies a really important position in global supply chains. No wonder today the rest of Asia looking pretty tepid. The region's benchmark not quite following in the footsteps of Wall Street's gains overnight. Jumana.
Avril, thank you so much. Yeah, a bit of a mixed bag as we talk about the handover from Asian markets. All right, from Asia to Europe, President Macron has called on French lawmakers to set aside their personal ambition and reject a vote that would topple the government. Far-right leader Marine Le Pen has vowed to support today's no-confidence motion called by a left-wing coalition. Together, the two groups do have enough votes for the motion to pass.
I hope so, and it's indeed possible. It depends on the members of the National Assembly, each whom has a responsibility to the French people, to the voters of their constituency, and before France too, which is at a rather serious moment.
Well, that was the French Prime Minister Michel Barnier, sounding, I guess, optimistic about what may happen this afternoon. Let's get out to Bloomberg's Kriti Gupta, who's in Paris, right at the center of everything that's going on. Kriti, walk us through what may happen this afternoon and the fact that Le Pen actually seems supportive of the no-confidence vote that the far left have put through.
Well, Jumana, it's a really tough spot for Michel Barnier to be in. The fact that he's actually uniting the far left and the far right in a no-confidence vote, that is a hard bar to beat. And if indeed this no-confidence vote passes, it would be the first going all the way back to 1962. It would also mark Michel Barnier as the shortest prime minister in modern French history. That is not a great resume and track record for Michel Barnier. But what the next 24 hours looks like is this. At about 4 p.m. local time, you're going to get a vote brought, as you pointed out, by the far left, the NFP as well. If that doesn't indeed pass, which all indications say that, look, it will, if indeed you get both the Socialists and Marine Le Pen's National Rally Party on board, all of which have indicated that this confidence vote will go through. If it doesn't, however, the National Rally, Marine Le Pen's party, will bring a second vote on no confidence as well. If this indeed passes, Emmanuel Macron has two choices. He can, one, choose to keep Michel Barnier as a caretaker prime minister, or he can go back to the drawing board and elect a new cabinet. But net, Jumana, what you need to know, what the international audience and the markets need to know, is that this means that the French budget could roll over into early next year, really adopting some of the same constraints and the same structure you've seen in 2024. That could mean higher bills for French households, more inflation, and certainly a wider spread between French and German debt.
Yeah, and Kriti, let me just bring it back also to the political dimension here. I mean, we saw how long it took President Macron to find a candidate that was acceptable as prime minister over the last couple of months, and that candidate later emerged as Michel Barnier, sort of the candidate coming from the center. Should this government fall, then we're going to go back to the drawing board again. It's not clear who the next prime minister candidate could be. What does that mean for political uncertainty, not just as it pertains to the budget, but also just who is actually going to govern the country in the next few months?
Yeah, you make a really crucial point. Remember, Michel Barnier was ultimately an olive branch to the right because he is indeed a more right-wing leader. And I wouldn't say the far right, but a right-wing leader relative to the centrist that is Emmanuel Macron. He also, of course, was the famed Brexit negotiator, the chief Brexit negotiator. So it was kind of thought that he would come, be able to bring some sort of order to the chaos in French parliament at the moment. But to your point, Jumana, that does not seem to be the case. And this is on top of concessions he's already made when it comes to the budget. Things like taxes on electricity he was hoping to hike. Things on drug reimbursements he was willing to cut. Not enough for Marine Le Pen and her allies. That being said, what happens next is the big question, because it isn't clear yet. If not Michel Barnier, then who? That's a question Emmanuel Macron's going to have to answer if this no confidence vote passes in 24 hours.
Yep, and then obviously the next question becomes how long can President Macron hold on for? His term ends in 2027, but clearly there's pressure on him right now. Kriti, thank you for bringing us the latest. Let's see what happens in the next 24 hours in France. Kriti Gupta in Paris. Well, South Korea's main opposition party says it will seek to impeach President Yoon Suk-yeol after he shocked the nation and the world by imposing martial law, only to reverse it just hours later. Let's get more with Asia economics reporter Katya Dimitrieva. We were talking earlier with Avril about some of the volatility we've seen in Korean assets, but clearly this situation isn't resolved. Even though martial law isn't imposed, it's been quite the 24 hours in South Korea. How much of a lasting impact did this have on financial markets and the South Korean economy in months ahead?
Yeah, and not even 24 hours. I mean, it was more like 12, it was very, very quick. And lasting economic risks are definitely a factor here. When the Bank of Korea and policymakers very quickly, the main opposition Democratic Party, came out this morning with comments to sort of calm the market, that's sort of the immediate effect and the immediate aid. But in the long term, of course, South Korea has some growth challenges next year. Economic forecasts have already been revised down. And then on top of that, you have President-elect Donald Trump, who has threatened tariffs around the world, but particularly would be hitting South Korea hard given its reliance on exports, particularly the manufacturing sector, chips, but really a range of goods. So the next kind of 24, 48 hours will be really important because they're seeking, the main opposition party is seeking this impeachment or resignation, and it could come as soon as Friday. They need 200 votes out of the 300 members. They have just under that, so they'll have to rely on some people from Yoon's own party to come over to their side. So we'll probably be expecting a lot more before the weekend is up.
Yeah, what was interesting is that the lawmakers voted pretty much unanimously to repeal the martial law that was in place. So in the end, it was actually a small victory for the democratic procedure, given the fact that it could have been a constitutional crisis. So that's something to take away. Katya Dimitrieva in Hong Kong, thank you very much. Now, still ahead, we will get the market outlook with Capital Link amid political uncertainties across Europe and Asia and the changing geopolitical landscape. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. More Fed officials are signaling support for additional rate cuts, but say the central bank's policy decisions are not on a preset course. Market uncertainty remains high ahead of the Fed's policy meeting in 2 weeks, with Fed Chair Jay Powell also set to speak on Wednesday.
Over the next year, it feels to me like rates come down a fair amount from where they are now. Just the inflation series is kind of my pet metric. It's the most important part is to look at inflation and not just the aggregate, to kind of break out the categories. And so my pet thing has been housing inflation.
I view the economy as being in a good position after making significant progress in recent years towards our dual mandate of maximum employment and stable prices. The labor market remains solid, and inflation appears to be in a sustainable path to our 2% goal.
Let's bring in Brett McGonegal, CEO at Capital Link. Always good to chat to you. There, we were just listening to what some of the Fed policymakers had to say. What are you thinking the Fed are going to do come December? Are they going to go for another rate cut?
I definitely think they're going to cut again. I think that the job, I've been highly critical of the Fed, so I'll give them a little bit of a break here. I think the job has gotten a little bit easier because the markets are responding, and I don't think it's a make or break move in December. However, I do think threading the needle for Powell has gotten harder with the Trump effect. So I'm not so sure. I don't know which way you want it. Easier because you have less downside risk, less headline risk, or harder because the Trump effect is going to be something Powell really needs to negotiate.
What do you think the narrative is going to be for the markets next year in 2025?
So I think that there's a really nice underpinning coming in about worker productivity in the U.S., which I think is very important. I think it will be a theme that you see. It will probably balance some of the supply restrictions that you saw. Maybe we get more of a balance in the worker productivity, which is not really coming in other markets. So the U.S. seems to be a highlight there. So I think you'll see that.
Why is that? Because of AI?
Honestly, I don't know. What I think is you've got a workforce that's re-engaging. I think that you've kind of found an equilibrium in the market. And I think that there's a prospect of change coming, and maybe, the people are actually re-engaging and becoming more committed to work. It's more of a philosophic thing, I think. I'm not an expert on how to do it, but what I think is important is that it gives an underpinning and it gives a new theme for the Fed to kind of play with, because you wouldn't want the other side. But I do think it's still challenging to figure it out.
Yeah, and we say that, and yet new record highs for the stock markets. S&P is tracking, more than 25% up already, and we've got another month to go to the end of the year. How is it possible that this performance can be repeated in 2025? And we know that Trump likes the stock markets, and he's going to want to see a repeat.
Look, I'm a bull forever, so I think that unfortunately humans love to create bubbles and they love to bring things to excess levels. I'm not saying we're at a bubble, but I think the path of least resistance is still higher in the U.S. I think we're probably going to get a step up early in the year, and I think the market's going to trade even higher from there. I think it's a kind of a refresh, a hope trade. I think people are finding little places around the world to put money. If you go to mid-October in China to today, and you draw the markets, China's down 20% from the bazooka that they, were going to let go. And the U.S. is up 7 or 8% in the same time period with no monetary influence. So I think that the investors are voting with their money and they're following the U.S. lead.
Yeah.
And I think, unfortunately, it's the only game in town right now.
Why unfortunately, though?
Because, like we were talking off air, it just gets boring after a while, right? You like to see things spread out. There's hope around the world.
A little bit of volatility. I'm sure traders will tell you that.
And, especially here in the region, you like to see, some more. Everything, there's a great feeling here, but it's just calling the same 7 names every day. The Wall Street narrative is made up of all these people that have all these specialized trades and all these, great ideas, and all comes back to 7 names at the end of the day.
Specifically one stock even, maybe, but it's just back to NVIDIA.
Right.
What do you think is the biggest risk then for markets in 2025? Because it can't all be smooth sailing.
Yeah, look, I think that we're going to get an easing of tension around the world, which is a positive. I think if there were to be something that happened on some geopolitical front, which I don't really think is going to happen, that could be a huge risk. I think if there is a further bifurcation of the U.S. political system over the transfer of power, not saying that the Democrats are not going to give the transfer properly, but there's still a lot to be undecided in the Trump cabinet and really where policy is going. So if for some reason Trump were to stumble and not be able to either articulate where he's going or deliver, you could see a pause. But I really don't see that banana peel anywhere.
Were you one of the investment community who was encouraged by the nomination of Scott Bessent to be Treasury Secretary? Do you think that's a good choice?
I think it's a great choice. And I'll tell you why. I think if you look at most of the appointments, they've been very Trump-friendly in the Trump camp. I think Trump has learned a lot from the previous, his previous 4 years about the trust and the people around. Bessent is not in that. He's not been in that sphere of influence. I think it shows that Trump takes the Treasury Department extremely seriously, and he, had a broader scope in looking for the candidate, and I think the best candidate won. And I think it's extremely important for the world to have somebody in that position that's well-versed.
Yeah, so then putting everything you've said together, how are you positioned into 2025? Given these markets are boring, just simply long the stock market, long Magnificent Seven, are you long?
Yeah, look, I said in the notes, I'd love to see the U.S. market rally broaden out and get out of the 7 names and see some rotation.
What needs to happen for the rally to broaden out? We've been
I think
saying
the
that for a while
reshoring
now.
idea, if Trump's reshoring idea really takes hold and people start to buy into the fact that he's bringing manufacturing back or he's bringing, iron ore production or whatever it may be, steel, any of the big industries that once were titans in the U.S., if we start to see that really take shape, I think you'll see this kind of renewed effect of the extra money coming in around the 7 and bolstering everything and then creating a wider base. When you create the wider base, you were talking before about breadth of market and depth of market. The wider base is your it's the thing that stockpiles everything. If you can get a wider base, you have less of a chance of falling.
Yeah.
And I think that's really where the market needs to be. And I think that the hope is there. I think Trump wants to do this from a very make America great again, his idea. He wants to bring this back, and I don't see any reason why he's not going to try and do it.
Yeah. It's a big challenge, though, given how competitive the industrial landscape is around the world. Brett, thank you so much for coming on.
Thank
Good
you.
to chat to you, as always. Brett McGonegal, CEO of Capital Link. Well, coming up, OPEC Plus nations make progress towards an agreement to delay its oil production revival by another 3 months. We'll discuss the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Oil is holding steady after the biggest advance in more than 2 weeks, jumping more than 2.5% yesterday. This as OPEC Plus made progress towards an agreement to delay its oil production revival by another 3 months. And after the U.S. imposed more sanctions on Iranian crude. Let's get more with Bloomberg's Middle East energy markets reporter Anthony DePaula. So this is, of course, reporting that has happened in advance of the meeting that's taking place tomorrow. But the expectation is, once again, they're going to have to delay the decision to put extra oil barrels back to the market.
Yeah, exactly. That increase in production was supposed to start in January as they rolled back some of the previous cuts. Already have been delayed a few times. From planned to start in October. Now we're looking at January, and now we're even looking at that going through the first quarter. So OPEC Plus already last week had been discussing a delay in that increase in production, and now they're discussing a delay not only of just 1 month, but potentially 3 months now. And so that's kind of a recognition that there's just too much supply on the market. Demand is too weak to take up that extra supply that's coming in. OPEC Plus already had to delay the meeting. It was supposed to take place this past weekend. Now we're looking at it taking place tomorrow. And so we'll see how the parties come together. But we are hearing that there is agreement, rather not disagreement around that proposal. So once they come together and make that final agreement, they'll push that forward for that delay.
So we'll get that on Thursday or Friday morning. Anthony, maybe this is an existential question, but are they ever going to be able to put those oil barrels back to the market without causing a significant down movement in the price of oil?
Yeah, well, ever is a long time, so I would say that at some point they will be able to. The long-term OPEC strategy is to be the last man standing in the oil market. They've got plentiful barrels, also some of the lowest costs. So eventually, as other producers scale back, they will. But right now, in the immediate term, we're talking next year, it's going to be very difficult for them because there is simply enough extra capacity coming to market from other countries like the United States, like Brazil, like Guyana, like Canada, that is going to take up the extra demand that's coming into the market.
Yeah.
So demand growth is going to be a little bit weaker than it has been in past years. Some forecast for less than 1 million barrels a day in terms of extra demand coming into the market, and then that extra capacity coming into the market exceeds 1 million barrels. So that takes it up. And then you're talking about OPEC with more than 2 million barrels a day of capacity currently off the market that they're trying to bring back.
Yeah, so the hope is either you get a big jump in demand or Trump comes in and starts applying maximum pressure to Iran, maybe to Venezuela. Some of those sanctions start biting and you take a bit of supply off the market. I mean, those are the only ways that you're going to get some form of rebalancing here.
Yeah. Well, what OPEC is really focusing on is the price, and the price is going to remain I wouldn't say depressed, but kind of in this compact range that we've been seeing because of that excess supply. So if OPEC could be producing at these levels and have that above 75, say above $80, they would be happier. But eventually they do want to get that production back in the market. Of course, as is with Donald Trump, there's lots of countervailing tendencies. He wants to bring production back into the market from the U.S. to lower prices. He does want to decrease Iran. So there's some countervailing tendencies there. So we'll see how that plays out.
Probably he doesn't know what he's going to do yet.
Right.
We'll find out next year. Bloomberg's Anthony DePaula, thanks so much. Well, coming up, we're going to talk about South Africa's economy unexpectedly contracting. We'll discuss how it will impact the government's goal. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Political chaos in South Korea. The country's main opposition party is seeking to impeach President Yoon Suk-yeol for illegally declaring martial law. GDP shocker. South Africa's economy unexpectedly contracts in the third quarter after the agriculture sector slumped the most in at least 3 decades. Plus, Germany signals NATO membership for Ukraine could be part of a potential peace deal with Russia. We'll have the latest as foreign ministers meet in Brussels. I'm Jumana Versace in Dubai, where it's just on 9:30 a.m. Welcome to Horizons Middle East and Africa, our second hour. Markets are leaning towards the green. S&P and the Nasdaq both up about 0.1%, 0.4%, respectively, gaining ground actually in the last couple of hours. This after another record high yesterday. Powell will be speaking later this afternoon, so watch out for his remarks. And then, of course, Friday NFP data to watch out for as well. Brent, we've been talking about the move upwards in the price of oil in the last 24 hours. Yesterday, we climbed more than 2.7% on 2 bits of news. The first is reporting that we were just speaking about that OPEC Plus are considering delaying once more the decision to put extra oil barrels back to the market by another 3 months. The other little bit of news that came out was that the U.S. are imposing sanctions on tankers transporting Iranian oil. So again, geopolitical dimension there. Euro in focus, trading at around 105. So we have gained a bit of ground versus the USD this morning, but the focus is going to be on the French political developments this afternoon with that no confidence motion going through at around 4 p.m. local time. So stay tuned for that. In terms of market performance, though, I just want to flag this to you because I thought it was quite interesting. Take a look at investor optimism vis-a-vis stocks. Not only are stock markets at an all-time high, the 55th record high for the year, but looking ahead, investors continue to be quite optimistic about the fortunes of where the U.S. stock market is going. So not only is it positioning, but also sentiment as well to back it up. Okay, overnight we were really following closely all of the developments going on in South Korea. Quite a whirlwind in terms of Korean assets. But Avril Hong is in our Singapore studio. Just get us up to speed on exactly what has happened and how the picture is looking right now for some of these South Korean financial assets.
Well, we've been talking about how the stock markets are under pressure today in South Korea, so I thought I'd focus on the moves in the Korean won because after the shock announcement, we did see it hit levels we haven't seen since 2009. And I think what was interesting was that with recovery following comments from financial authorities about provision of unlimited liquidity, reassurances to investors. But that doesn't mean that the Korean won is out of the woods. You think about how the opposition is still calling for the president's impeachment. And indeed, this is one of the points that MLive's Mary Nicola is making on the blog, that perhaps given the political uncertainties, that global FX volatility is just something that's here to stay. You think about how it's not just South Korea that's seeing political turmoil. Similar picture in France, US-China trade tensions. The offshore yuan hit the lowest level against the greenback in a year just a day ago. And all this is without even accounting for uncertainties surrounding central bank policy. The data-dependent approach of the US and Japan. What is that going to mean for the rest of the year and into next year? The Aussie also in focus today as GDP surprise to the downside, and that is also fueling bets of dovish hold from the central bank down under at its upcoming meeting. So all this in focus in the FX space. Jumana.
Yeah, Avril, thank you so much. And as you were speaking and listening through some of the political developments, we're just getting some breaking news from South Korean local media saying that South Korea parties plan to submit the impeachment proposal at 2:40 p.m. Local time, which is actually in 6 minutes' time. So this is going to happen in about 5 minutes' time. And we know that it is in direct reaction to the president's decision to impose martial law that was rescinded by the end of the day, but clearly the opposition lawmakers are not happy and are now seeking an impeachment. So that, per local media, the proposal is going to go through in the next 5 minutes. Now on to Africa now. South Africa's economy unexpectedly contracted in the third quarter after the agriculture sector slumped the most in at least 3 decades. The decline is a setback for the government's goal of boosting growth and job creation, with the economy averaging less than 1% growth over the past decade. So let's bring in Bloomberg Economics' Yvonne McGonegal in Johannesburg. Looking at those numbers, the economy contracted 0.3% in the third quarter, but then the agriculture sector fell 29%. What is going on?
So South Africa and Southern Africa in particular has experienced a weather pattern, an El Nino weather pattern, which has resulted in dry conditions. So we did expect poor numbers out of the agriculture sector, but I must say it was a surprise to see the depth of the contraction. So as you've rightly said, the agriculture sector contracted by 28%, which contributed to the decline of the economy by 0.3% quarter on quarter. And the market had actually been anticipating growth of around 0.4%. So largely the decline was due to what we saw in agriculture, which, as I mentioned, was a surprise.
Yeah. If you look at the numbers tracking the first 9 months of the year, it looks as though the economy has actually expanded, but it's a low number. It's something like 0.4%. What is the read across towards the end of the year? Because again, we've been talking about all of this positive investor sentiment coming back to South Africa post-elections. Is it actually translating to the real economy?
So the upside and in the growth numbers and what we've been seeing from the second quarter is that demand has started picking up. So that pickup in household consumption persisted into the third quarter, although it was a little softer than we did see in the previous quarter. But what was more encouraging for us was to see the gross capital formation, which is investment, grow for the first time after declining for 4 quarters. So certainly what you're seeing there is that this positive sentiment around the new administration has led to investors actually putting money where their mouth is and starting to invest in the economy. And we expect that to be sustained going forward.
Yeah, well, big question for investors, and luckily we have one standing by. Bloomberg's Yvonne McGonegal in Johannesburg. Thank you so much. Let's bring in Thea, Jamison, Managing Director at Change Global. It's great to have you with us on the show. First of all, before we start talking about the opportunities that you're seeing in some of these emerging markets, I know you look at South Africa, some of the GCC economies as well. Just give us a sense of how you identify these opportunities.
Hi, Jumana. Great to be here today. Thank you for having me. We are global investors in the emerging and frontier markets. We are unique in that we allocate a meaningful exposure to all 4 regions globally. That includes Africa and the Middle East, Asia, Europe, and Latin America. We're currently invested in 40 countries, 11 of them in Africa and the Middle East.
Yeah.
We do that because we're able to identify hidden gems across the board and diversify away risk. So this year, Africa and the Middle East have been contributing those positive attributes.
Yeah, I mean, the very basic mantra is high risk, high reward. But how do you maximize the reward you're getting for the risk that you're investing in? Because alongside these frontier markets, you're obviously expecting to see a lot of risk premium.
Absolutely. So we do that through global diversification. That helps us keep in check the risk that we take on. And we focus on domestic stories that really helps us diversify away from the global headlines, flows, and risks.
Speaking of a domestic story, let's just pick up on what our colleague was saying about South Africa. Bit of a shocker for the third quarter surprise contraction, but more broadly, I think there is certainly a lot of optimism about where the economy is headed ever since the elections. How do you feel about investing opportunities there?
We're very excited about South Africa. It's one of our top markets going into next year. And what we're seeing in South Africa is that small changes can have immediate impact. It's really addressing low-hanging fruit, such as access to electricity, corruption, and the new government has been very successful in doing that. As a result, we now have over 250 days without load shedding, and that directly affects the economy. Maybe not agriculture, which has disappointed in today's number, but the manufacturing economy, business sentiment, it's all up. And that combined with a market that's vastly overlooked and underpriced gives us a lot of hope and optimism.
Yeah, are there any specific sectors or industries that you're looking at there?
So we are looking for direct domestic-driven exposure. One of the ideas that we're very excited about is investing through the Johannesburg Stock Exchange, which is listed on the Johannesburg Stock Exchange. The reason being is it's a direct play on business sentiment, on the reviving economy. S&P recently upgraded the outlook for South Africa. We're seeing the currency, equity starting to appreciate, and the market itself only has a 70% market capitalization to GDP ratio, which is very, very low compared to emerging markets at roughly 90%, or developed countries, which are on average over 150%.
Interesting factoid there. Let me just also ask you about Saudi Arabia. I know you just paid a trip to Riyadh, and again, not a day goes by where we don't have someone on the show talking about opportunities, investment opportunities there, what the kingdom are doing to attract international investors. What do you see as the opportunity set?
Absolutely incredible. I first visited Saudi Arabia 7 years ago. To be able to return during this dramatic time of transformation and change is truly a privilege. I was so incredibly excited to be back and see the country in such a new and better place. The government, as well as society, has embraced change, and you can see that. We're excited about the economic outlook going forward. The IMF recently confirmed their strong GDP outlook for next year at 4.6%, which is one of the better globally. And that's driven primarily by the non-oil economy, possibility for some oil production coming back online. But as of today, the non-oil economy is over 50%, and that's pretty dramatic. One thing that we're very excited about is the stock market. I met with Tanto management on Monday and learned that there are 50 new private companies that are getting ready for listing. So the stock market itself is thriving, and there's terrific opportunities going forward.
It's funny, we were just speaking to the Citi head of investment banking, and he was saying that the outlook for next year is looking perhaps even more positive than this year.
Absolutely.
How do you weigh up these idiosyncratic opportunities in some of the jurisdictions that we spoke about versus some of the global headwinds? You talk about the potential for a strong USD under the return of President Trump. You talk about a reshoring trend, a deglobalization trend, extra tariffs. Does that not impose headwinds to some of the frontier markets that you look at?
There are headwinds, there are uncertainties, but there are always headwinds and uncertainties. And the way we manage that is through diversification. We are invested across all regions, many domiciles, and that allows us to diversify away some of that macro risk. But as far as Africa is concerned, it is not a major trading partner of the U.S., and that's where the focus seems to be. And if anything, we feel that there's an opportunity for Africa to rise and take up some of that share in the reallocating flows and supply chain opportunities.
Okay, well, that's a great place to leave it, and also explains maybe some of the focus that President Biden is giving to Africa in the last couple of days and the last couple of months of his term. So we'll see how the politics play out as well. Thea, Jamison, Managing Director at Change Global, thank you very much. Well, coming up, Ghana prepares to elect a new president as an illegal gold rush exposes election risks. We'll discuss the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Ghana heads to the polls on Saturday to elect its new leader, replacing President Nana Akufo-Addo, who is stepping down after his second and last four-year term. Meanwhile, the indebted West African state is potentially losing billions of dollars from illegal mining that's also causing environmental carnage. Joining us for more on this exclusive reporting is Bloomberg's Jack Ryan in London. Jack, just run us through how important this gold mining sector is, these small-scale miners. What can you tell us about this type of mining specifically and some of the issues that this type of mining is creating?
Yeah, so I mean, this is a really important part of the gold market. It makes up this kind of small scale, or what's sometimes called artisanal scale mining, makes up about a fifth of global supply. And actually about 80% of the gold miners in the world work on these type of mines. So it's a really important source of income. I mean, across the world, it's in the Philippines, it's in Peru, but particularly in Africa, it's the most popular or I should say the most common form of employment after farming in rural Africa. And it accounts for about half of the 1,000 tons of gold that Africa produces in a year. So it's a really important source of hard currency. It's it's an industry in which you can make good money. It may be somewhere where there aren't so many other opportunities. But there's unsurprisingly some real problems related to environmental damage, related to lost tax revenue, smuggling. And so we tried to look into that, and particularly in Ghana, where this has become a bit of a political football in the run-up to the election.
Yeah. What is the government doing about any of this? Are they trying to crack down on illegal mining activity?
Well, so there's been a real fight over it because the president has said that he was going to send soldiers to clamp down on this, what they call galamsey, this kind of small-scale miners in some of the rural areas. And there's been a wave of protest, particularly in Accra and in the rural area, in the urban areas, calling for this to end, because you have, in some rivers and some water treatment plants, they say 60% of the water they treat has been affected by this type of mining. And the mercury is obviously very toxic when it gets into people's drinking water. But at the same time, it's a really important source of revenue for some of these communities outside of the big cities. Ghana also needs the hard currency. This earns about $10 billion a year, we estimate. And so for a country that received an IMF bailout last year, that's an industry that it's not easy or necessarily popular to shut down.
Yeah. Great reporting. Well, the full article is up on the terminal for anyone who wants more information. Bloomberg's Jack Ryan in London. Thank you so much. Well, coming up, Germany's foreign minister says NATO membership for Ukraine could be part of a potential peace deal with Russia. More as NATO representatives meet in Brussels next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. German Foreign Minister Annalena Baerbock says NATO membership for Ukraine could be part of a potential peace deal with Russia. Foreign ministers from NATO countries are continuing their meeting in Brussels, their first since Donald Trump's election win. So let's get more with Bloomberg's Bill Ferries. Well, to be a fly on the wall with all of those discussions that are taking place, of course, the first since Trump was reelected back into office. But one development that I think is quite interesting, Bill, is I'm getting the signal and the sense from many European countries that they would actually like to see an end to the war in Ukraine. And even there's this possibility floating of doing some sort of a deal with Ukraine where they get accession to NATO membership in exchange for conceding on some territories. Tell us more about that.
Yeah, I mean, I think there's going to be a lot of questions about the details if this continues to go forward. But you're absolutely right. There's a lot more talk about this all winding down, at least to some kind of truce, if not a full peace deal, in the coming year. Of course, incoming U.S. President Donald Trump has said he would like to see this come to a quick end, and there's a lot of concern that he will quickly move to cut off U.S. support for Ukraine in this conflict. But, we have these comments from the German foreign minister suggesting that perhaps NATO membership is one of the elements that would be discussed when you're putting together the framework for some kind of a peace deal. Now, it's not clear how many people are on board with that, how many nations are on board with that happening quickly. It's not even clear that German Chancellor Olaf Scholz is on board with that entirely. But it is something that you are hearing discussed more, and you saw those comments from President Zelensky that he foresees a possible NATO role in Ukraine, even if that means perhaps Ukraine ceding some of the territory that Russia currently occupies.
Yeah. And let's just bring it back to President Trump, because we are going to be bringing most things back to President Trump in the next 4 years. I thought it was really interesting that the NATO Secretary General, Mark Rutte, actually met with Trump in Mar-a-Lago. They had a meeting, and we know that Trump has been a fierce critic of NATO and their spending in his first term. That was a big focus. How are we expecting the Trump administration's relationship with NATO to be different, or perhaps be a little bit more two-way in his second term in office than it was the first time around?
Well, I think one thing world leaders learned from the first term is you want to get in with Trump early and preferably often to give him your point of view. He often acts, people say, on the last piece of advice he's received. So I think it was a smart political move by the new NATO Secretary General. But I still would expect it to be a potentially very rocky relationship. Trump in his first term really pushed hard and criticized allies who he said were not spending enough on defense, hitting that 2% of GDP target. There were times in the campaign where he's talked about that target perhaps being higher, say 3% or more. So for countries that have still not reached the 2% threshold, that would be an even bigger hurdle. I think that's likely to be the state of the relationship going forward. I think Trump is not going to stop with demands he made back in the 2016-2020 period. He's probably going to push for new goals. And I do think finding a way to wind down Ukraine, the Ukraine conflict, is going to be high on his priority list.
Yeah. Very valid. Bill Ferry said, thank you so much, as ever, for the reporting as the NATO foreign minister meeting takes place in Brussels today. Ukraine high on the agenda. Well, just to bring you some breaking news. So the South Korea opposition parties have now submitted an impeachment proposal for the president. The local media had reported that the proposal was going to go through. It has now actually passed. And so where we go from here, obviously, is a big question for investors, for markets. We saw a massive reaction overnight, a bit of a whirlwind session for Korean assets. The president decided to impose martial law. Instantaneously, you saw Korean futures drop more than 7%. But then after that law was rescinded, we ended up tracking around 1.5% lower on the day. But here you can see pictures emerging yesterday as it became to light that the martial law was imposed. Lawmakers voted against it. And now those same lawmakers are now submitting an impeachment proposal for the president. So still a lot of political uncertainty playing out in South Korea, and our Bloomberg intelligence analysts have been warning that even in the run-up to this, you had seen a big amount of equity outflows. So we expect the turmoil in financial markets to continue there. Something to keep an eye out on. As for broader equity futures, brushing off those concerns, the picture is green for S&P futures. Nasdaq building on another record high for the S&P yesterday. Eurostoxx futures leaning flat as we head into that French no confidence vote. But that was it for our show. I'm Jumana Versace in Dubai.